newspaper Charlie Hebdo, and a kosher supermarket. It's the fifth time this year that Louisiana has been hit by a tropical storm. Zeta came ashore there as a hurricane and battered New Orleans before heading into Mississippi and then Alabama. It's now been downgraded to a tropical storm. About 2 million people are without power today. At least one person was killed. In Germany, Chancellor Angela Merkel has defended her decision to once again severely restrict movement. She told Parliament the country is in a dramatic situation with the rapid spread of the coronavirus. Starting Monday, Germany will impose a month-long partial shutdown. And Taiwan has achieved a different kind of record involving the coronavirus. The country has gone at 200 days without a locally transmitted case. And overall, Taiwan has had 550 cases with 7 confirmed deaths. The island has relied on strict border control, contact tracing, and masks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rizka Gupta. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
After 9 years at the helm of the world's largest wealth manager, Sergio Motti is handing over the reins. On his last week as CEO of UBS, I spoke to him about overhauling the lender, taking risks, and what it takes to be one of Europe's longest-serving bank CEOs.
It's not about beating somebody, it's about doing the best for your clients, doing the best for your shareholders.
Catch my interview with the outgoing UBS CEO, Sergio Motti, this Friday on Bloomberg Television.
Sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The 2020 presidential election is in the home stretch, and a handful of states will decide who occupies the Oval Office. I'm David Weston. Join me for our second Swing State special as we turn our focus to Florida, Pennsylvania, and Michigan this weekend on Bloomberg Television.
We are all in this together. No member state will safely emerge from the crisis until everyone everyone does.
What was the best strategy? Lock down the elderly, the most vulnerable, test, alert, protect. None of that is sufficient in the current situation. We need to take it further.
We must act now, as we have done without hesitation. Obviously, they were painful choices. Because there is no restrictive measure that has no impact.
We know now that we need to reduce contact again, and with this, lower the risk of infection. Because of this, we need another national effort for the month of November.
Some of the European leaders on stricter restrictions as cases continue to rise in the European Union, and the restrictions in France and Germany come through in the last 24 hours. Well, I turn to the price action briefly. It was a rough Monday, Tuesday, Wednesday in Europe, and some of that bled across to the United States in the price action of yesterday. This morning, this bounce is fading fast on the S&P 500, up just 4 now. We advanced a little more than 0.1%. In Europe, the Euro Stoxx 50 is down by 1 full percentage point. And Tom, I know you've been looking at Euro and Euro crosses. Euro dollar just about holding on to a 117 handle. I think the low of the morning is 117.02, but there it is, off by a third of 1%.
It is a plunge, to say the least. I can give you that exact plunge, and I'm not going to be flip about it. It lines up with the challenges in Nice as well. We've gone from a 117.50, John, right down threatening 117.05 right now. Just to bring you up to date, Le Monde reporting in Paris that Mr. Macron will meet with the assembled in Nice, including the bishops of France, and there's no message yet on when he will speak to the nation off the terror attack scene in Nice. Right now, I would respectfully suggest this is your interview of the day on what are we going to do about this pandemic. Not about cases or deaths or doctors and math, but about a public policy of how to deal with this pre-vaccine. Marta Wazinska is with Duke Margolis Center for Health and Policy as their deputy director, but far more has 2 paragraphs of public service to the nation working with government entities on what to do. Marta, we just heard there from a lot of politicians managing the message. You have immense experience in the do. What is the do of rising cases, the do of even rising deaths, if not as bad as March?
Thank you, and thank you for having me here. This is, we are in unprecedented times. The last time we have had this kind of a pandemic was over a century ago. It's not one thing, it's a lot of things and a lot of players that need to come to the table. And the residents of this country need to be stepping up as well. The federal government has been doing a lot. The efforts to advance a vaccine, to advance the monoclonal antibodies, about which we might be hearing really soon, have really progressed at speed that's unprecedented. That's incredible news. But the governments have tried to step up and try to reinforce a lot of the public health measures that we know work really well. It has been a challenge. Until we have a vaccine widely available, it is going to be social distancing and masks.
Okay, let me cut to the chase. I had an elected public official tell me they can't force people, in this case, to wear masks. In Asia, that's not the case. There seems to be a very strict government. This is the way we're going to do it in Asia. Why can't we approach that in the United States of America?
I think this is a question for people with legal backgrounds. I mean, we're a different country. We have a different culture and we have different standards. We have a democracy. It does make it much more challenging than it is in other countries. There's no doubt about it. And that's why it's much harder for us to deal with it.
Marta, the most terrifying article that I read today was in the Financial Times, and it was about the cases in Europe and how a growing proportion of them are a mutation of COVID that really seems to have generated from Spain. How concerned are you about the virus getting ahead of our science, about this virus mutating to a point where all of these vaccines and treatments become obsolete?
I am not nearly as worried about this. This is not a virus that actually mutates in very quickly. So there have been changes with the virus that have allowed it to spread much more quickly, which is disconcerting. I am quite confident that I think we actually will be able to have reasonably effective vaccines, and the monoclonal antibodies are promising themselves to be actually also very effective. The challenge there is going to actually be to really manufacture enough quantity and get it to people fast enough.
Marta, great to catch up with you this morning. We appreciate your time. Marta Wazinka there, weighing in on the public health crisis of the last 12 months or so. I want to turn to the price action, bring you the shape of the session on the S&P 500 futures. We roll over unchanged. This bounce has faded really quickly. This bounce never even got started over in Europe. Euro Stoxx 50, the equity market in Europe, Tom, down by about 1 full percentage point. Yesterday, the losses all across the board, but the big losses were in big tech. Interesting to see back on top again, NASDAQ futures outperforming on a relative basis, but more broadly, risk appetite just hasn't bounced back after a vicious Monday, Tuesday, Wednesday.
Red on the Dow, and we're going to see SPX, John, go red as well. John, what I would notice as well is gold has been really stable here through the morning and has just given way. I know $4 isn't a lot, but nevertheless, gold slips away to 1875 the ounce. John, Lisa, and you are watching Euro 117.07.
Yeah, I think we're always focused on the shark closest to the boat, and the shark closest to the boat over the last week. Rick Reeder would always use that phrase for me over the last several years talking about this market. The shark closest to the boat has been the election. That's where the focus has been. I caught up with a fixed income investor yesterday, Lisa, and they said to me quite bluntly, shame on us, the investor community, for taking our eye off the most important thing. That was what was happening with COVID and what might happen with the economic restrictions.
Yeah, I have to say, the conversation that you had with Mohamed El-Erian a couple weeks ago, where he was talking about how the market just wanted to go up and people were coming up with a narrative around it, that's how it felt. Well, now we are coming up with the other narrative. Right now, all of a sudden, people care about viruses. We asked John, every fund manager on this show, about the virus counts as they came on and expressed their bullish view. And everyone said there will be a vaccine, but there will also be a fiscal support bill. Why is the promise of a fiscal support bill not enough right now to buy the dip?
Fiscal stimulus can't get you past winter, and that's the problem, isn't it, Tom? Winter. We're not even in November. Well, it's about to get colder. You see this in the Southern Hemisphere. You know, we talked a lot about Australia coming out the other side of this. Guess what? It's getting warmer. Guess what's happening up here? It's getting colder. And I think the question on a political basis that's going to be asked in the coming days in the final week of this campaign, Italy and Germany have been celebrated for their response, and they've got restrictions again. The president has been criticized for his, and they're all in the same boat at the moment, Tom. That's notable.
I noticed, John, I darkened the door of Alain Ducasse's Benoit, and the challenges there of outdoors in the cold versus selected indoor seating. Every restaurant's dealing with this weather change.
This market fades. The S&P 500 negative. This is Bloomberg.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It doesn't really matter who's elected. I think the market is heading higher into next year.
We could be in for, a prolonged correction.
The services part of the economy is really in trouble.
What we need is central bank keeping stability in financial markets.
The longer we wait, the bigger that package will need to be.
It's clear that we are going to see downward revisions in many businesses. The question is how strong they are.
It looks like we're heading towards a double dip. I think that's increasingly likely in Europe. In the US, we might still have a fighting chance.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance. Jonathan Farrow in London, Lisa Abramowitz, and Tom Keene in New York. We welcome all of you today to extraordinary news flow. An election in 5 days. The tragedy in Nice. We'll bring you up to date on that in moments. But also markets, well, there they are. Markets in reversal. John, you see it in the futures of the Standard & Poor's 500.
You do. We break down. We're down 5 on the S&P 500. We're negative 0.2%. The bounce in Europe was never convincing, and the bounce in the United States just has not held up as we inch towards the cash open. Euro dollar, Tom, clinging to a 117 handle. The ECB is getting what it wants for all the wrong reasons. A weaker euro for a fourth straight session off the back of more restrictions in Germany, in France in the past day.
A 116 print there, not seen yet. If we get a 116 handle, that will be symbolic on euro. And of course, distracted by the deaths in Nice. Again, we'll bring you that in a bit. Lisa Abramowitz, what was so clearing yesterday was the bond market did not move, and then it did.
Well, to me, this is the story of the week. We've got very hardcore risk off in response to very real threats of a widening pandemic, a worsening pandemic. Treasuries are not the hedge they used to be. Yields rose yesterday, which is exactly opposite of what they traditionally do when stock markets sell off. And today they are slightly up. And yes, they are coming down, but not to the same degree that you see the weakening, the dramatic weakening in futures ahead of the open, Tom.
John, I want to touch on Nice here, the second attack in Nice in a number of days as well. John, just your immediate thoughts as we see the news flow come in.
Continued tension in France, and very unique tension around Islamic terrorism, Tom. And Macron has warned about this. The whole country has been on alert for this. And another tragic set of events in the country today. The relationship between the magazine, the weekly, Charlie Hebdo, and the cartoons of the Prophet Muhammad, Tom, that tension is still there, and it just hasn't gone away in the last several years. I said earlier that we've seen this tragic movie before, and unfortunately we're seeing another version of it this morning.
The president of France flying to Nice. It's about an hour and 20-minute flight, much like New York to Washington, I would say, from Paris to Nice. The prime minister of France is speaking at this moment, folks. Jean Castex says the government's response will be firm, relentless, and immediate. He goes on to say that they have moved, rather, the state of affairs to, quote, the level of emergency attack for the entire national territory. So there's the latest on Nice, and again, we'll be following this this morning. With so much going on and with wonderful sets of conversation through the hour on radio and television, we start strong with Brian Levitt of Invesco. He's our global market strategist, and what is so wonderful with Invesco and their perspective is a global reach. Brian Levitt, what has been the global response to this worsening pandemic? Have other markets acted much like we see in the United States, like we see in Europe?
Actually, you've seen Asia hold up better than you have in Europe and the United States, and I think that's a reflection of a part of the world that had more of a history or a recent history in this century with pandemics, and seems to have done, at least for now, a better job of compressing cases and containing it. The significant hit right now to what we're seeing in markets has been in the United States and Europe.
Brian, let's talk about the United States and Europe. There seems to be a confidence that has returned to this market for many market participants that this time is somewhat different, that the case increase right now does not mean that we have the event that we saw in spring, maybe not the lockdowns in the United States. Do you think we're sleepwalking into some trouble once more, Brian?
I would say it's less of sleepwalking and more that we understood that this was a high probability. I mean, we've been talking about a next wave of cases since we first learned of the coronavirus, and anybody that went back and studied the Spanish flu knew that things could get worse once the summer passed. And so the difference is this time is, you know, many were caught very well off guard, very surprised by it, and we had to await a policy response from the Federal Reserve. It came, within 20 days, but it certainly felt like a long time while we were going through it for the Fed to come in and ease financial conditions. So we're in a better place in that we have a better understanding of the virus. We have financial conditions which have eased meaningfully, but we can't sugarcoat it. Clearly, this rise in cases and what looks like it's going to be the slowdown in human mobility will put a damper on this economic cycle, and we should expect weaker growth in the fourth quarter and into the beginning part of next year, and a need for more fiscal support for U.S. households and businesses.
Well, Brian, I know this is a little cliche, but I just wonder from the conversations you've been having, and I know you talk to a lot of other people in the market, how strong the hands you think are in this market right now and how high the bar for capitulation actually is. Given that we talk to so many people on a daily basis, talking about a vaccine on the horizon, more stimulus to come, do you think there's strong hands in this market right now?
I think there's some concern, but we should be clear. I mean, we saw quite a capitulation in February and March. If I have my numbers right, we had $3.5 trillion in money market assets coming into the year, and we were over $4.5 trillion in money market assets by March. I don't believe that has come down all that meaningfully. If you look at equity or mutual fund or ETF fund flows, the money is still going into fixed income at the expense of equities. There are a lot of investors concerned. Whether it's the election, whether it's the rise in cases, whether it's the U.S. debt level, I mean, you're hearing a lot of concern. So I think we've largely seen a capitulation. Could there be more? Yeah, I suspect that there could be more. But my point is to say there's already $4.5 trillion sitting in money market assets earning nothing. The Fed tells us it's going to be earning nothing probably till at least 2023, and their stated goal is to inflate away 2% of that value per year. So, that's a tough spot to be in for investors. Could there be more capitulation in the near term? Sure, but I expect with policy support, some medical breakthrough over time, and it took years after the global financial crisis. Over time, you'll perhaps start to see more money come back into the equity markets.
And is this the message, Brian, that we're getting from the bond market, which seems to not be reacting to the volatility in equities, that basically people are saying that the fundamental story hasn't changed? Growth may slow a bit in the near term, but next year it will come back and it will result in inflation and higher term premium.
Well, the good news is the bond market seems to get it right more often than anything else as regards to a leading indicator. And I think we do expect the economy to recover into 2021. It just might take a little bit longer now. And, again, what we've seen is we do have an ability to compress cases if we exhibit the right behaviors. And we've already seen a pretty meaningful easing of financial conditions. And I think the bond market is expecting more fiscal support at some point. We knew it was going to be challenging during an election year, but, I always go back to Churchill, at least it's attributed to Churchill, that Americans always do the right thing, but only after exhausting all other options. And I suspect we're exhausting options right now, but we'll ultimately do the right thing to provide some support as we await some type of medical or scientific breakthrough. So the bond market is not ready to call, a further decline in economic activity. But remember, rates are already still low, reflecting what is going to be slow economic growth.
If you're just joining us on Bloomberg Radio, on Bloomberg Television, Brian Levitt of Invesco quoting Churchill. That's always a good thing. John Farrow noting euro with a 117.00 print. We await a 116 handle. John, you really have to wonder how you invest, particularly institutionally invest, given some of these currency dynamics.
Yeah, I think going into Europe right now is a really, really difficult call ahead of this ECB meeting. We're sitting on session lows on euro dollar, as Tom points out. The low of the session, 117 flat, clinging to that 117 handle at the moment, Brian. Let's talk about that. Allocations abroad. How many times have you heard that chit-chat over the last couple of months? We're going to have a recovery, reopening. You want to allocate abroad and take advantage of a weaker dollar and that strengthening you might see in Euroland. Is that still a call that would resonate with you, Brian?
Some stabilization of dollar weakness.
Still there? Carry on, Brian.
Yeah, I'm still here. Over time, the dollar is likely. We're not likely to see the significant rise in the dollar we saw in the aftermath of the 2008 crisis. And the United States is challenged coming out of this. We need more fiscal support, so that should put some pressure, or at least keep the dollar relatively stable. But Europe is obviously dealing with the same challenge, and money's going to flow to the parts of the world where growth looks best relative to expectation. And you're right, that's going to be challenged in Europe. We started this conversation talking about Asia and select emerging economies where valuations are more reasonable compared to the United States. Growth seems to be on a better trajectory, and that's where I think investors can start to find opportunities. There's a lot of great structural growth stories in Asia, particularly in China, and that might be a way to play a weaker dollar environment. At some point, we'll get this recovery reflation trade. It's just in the next couple of quarters more challenged, and that means your U.S. stocks probably outperform European stocks, but the Asian markets look like they're on better footing.
Brian, great to catch up, sir. Brian Levitt there of Invesco. As we count you down to that opening bell, bear in mind, we've still got to talk about the economic data. 20 minutes away, you'll get claims in America.
Yes.
Lisa pointing out earlier as well, GDP as well for the third quarter. Futures going into that, unchanged on the S&P 500. We talked about that turn in the FX market about 60 minutes ago. Dollar strength coming back into the mix in G10. Euro dollar, Tom, 117.03.
Markets on the move in that key economic data. John, I must bring this to you in London. The Prime Minister of the United Kingdom. I am appalled to hear the news from Nice this morning of a barbaric attack at the Notre Dame Basilica. Our thoughts are with the victims and their families, and the United Kingdom stands steadfastly with France against terror and intolerance. John?
And looking to hear an address from President Emmanuel Macron at some point in Nice, France, a little bit later today. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Coming up next, Leslie Vinja-Murray of Chatham House. Looking forward to that conversation. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Authorities in Nice, France are calling it a suspected terror attack. 3 people were killed in a stabbing at a church. Police wounded the attacker whilst arresting him. He's now at a hospital. France is on high alert right now for Islamic extremist violence. Last month, the terrorism trial began in the 2015 killings at the satirical newspaper Charlie Hebdo and a kosher supermarket. Hurricane Zeta has weakened to a tropical storm as it heads through the southeastern U.S. It battered New Orleans, left 2 million people in the dark, and led President Trump to declare an emergency for Mississippi. Zeta was the 5th hurricane or tropical storm to hit Louisiana this year. The Supreme Court has handed Republicans a pair of defeats on deadlines for mail ballots to arrive. Both involve states that could decide the presidential election. Justices left intact a 6-day extension in North Carolina. Meanwhile, they refused to schedule a fast-track review of a Republican appeal involving Pennsylvania. And LVMH has agreed to buy Tiffany at a reduced price of almost $16 billion. The French luxury conglomerate will get a $425 million discount from the original price. The agreement ends a year-long saga involving a war of words, French government intervention, and lawsuits in the U.S. And another takeover in what is already a record year for chip industry deals. Marvell Technology has agreed to buy Infi for about $8.2 billion in cash and stock. The price represents a 42% premium to Infi's close yesterday. Infi counts Microsoft and Cisco amongst its biggest customers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
With Sleepy Joe, there'd be no graduations, no weddings, no Thanksgiving. They're already talking about no Thanksgiving. And in California, you have a special mask. You cannot, under any circumstances, take it off.
This country can't afford 4 more years of a president who thinks he's only responsible for the well-being of the people who voted for him. We can't afford 4 more years of a president who, instead of fighting the virus, attacks doctors. I can't get over this guy.
President Trump at a rally in Arizona and Vice President Biden in Delaware with just 5 days to go until wrapping up this U.S. election. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your market, 12 minutes out from economic data in America, GDP and claims just around the corner. 1 hour after that, we will have the market open, and somewhere in between, you will hear from Christine Lagarde, the ECB president, and you will get an ECB decision. And there it is, Tom Keene, a break of 117, a 116 handle on euro dollar, down 0.4%. Dollar strength back in the mix. In the equity market, down 2 on the S&P 500. We're negative 0.1%. On the equity market, Jonathan Golub at Credit Suisse just publishing, with all the chatter around the election, it's the virus that has been giving the market heartburn, not politics. But he concludes, Tom, near-term risks are real, but we remain optimistic as we look towards the horizon. And many people, I assume, share that view.
Part of our surveillance mandate on radio and TV is to give you the literature as it comes out, obviously from Mr. Golub. Many others will publish as well. Daniel Elpert publishes moments ago his work with Cornell Law on the American labor economy. And John, this is blistering. What we need is federal government bail-ins, not bailouts, providing not months, but years of relief. And, John, that really speaks to the market tension here as we're trying to figure out, John Farrow, the x-axis of where we are in this pandemic and where we are with our greater economy.
It claims 11 minutes away. Here's the data, Tom. The median estimate, 770,000. The previous read, 787 on US GDP. Annualized quarter on quarter, looking for something in and around 32% positive. That mechanical bounce back from shutdown to reopening from the previous quarter of a negative 31.4%. That data drops in precisely 10 minutes' time.
The VIX back above 40.77. Right now, we will segue, as we do, to politics. Leslie Vinger-Murray joins us with Chatham House. She has been such a support to surveillance with perspective on the election. Leslie, we are overwhelmed with news flow. If you were to write today on the election, what would be your lead paragraph?
I think the lead paragraph has got to be the extraordinary turnout that we're seeing. If you across the board, early voting, in person, by mail. I guess, you know, it's especially interesting in Texas to see that we're just about hitting already the number of voters that actually voted in total in Texas in 2016. We're at about 93% of that number. So early voting turnout across the country, but especially in certain states, is really remarkable.
Brief us on your read-in of the character of that voting and the assumption by Mr. Trump that Republicans en masse will show up the first Tuesday of November. Is that a correct theme, or are we off the mark?
Well, I think a lot of people believe that are watching this very carefully, that Democrats are more inclined, especially in some of those battleground states, especially in the northern battleground states where COVID has been very bad, that Democrats are more inclined to vote by mail. Of course, we know at this point, anybody who's voting by mail has to carry their ballot in. It's too late to send it in through the Postal Service. The Postal Service is simply not moving quickly enough. But we do expect more Republicans turning out on the day on Tuesday. But I think as people are hearing this message that they cannot actually put their vote from today in the mailbox and assume it will get there on time, we might see some turnaround in that. But yes, I think, and if that's right, of course, you know, what we're led to believe, unless we see a Democratic victory in Florida, North Carolina, that this race could then go on for quite some time, because it might look like a Republican lead, a Trump lead early on, and then it might begin to change over the next several days. But Tom, you know, there are a lot of people that think it's very hard to predict how Florida's going to go. It's up for Biden right now. But if it goes the other way, then of course it will take some time potentially to know what's happening.
Leslie, in 8 minutes' time, we're going to get the latest read on U.S. jobless claims, the last before the election. Typically, during election seasons, the economy dominates. In this one, not as much, and actually President Trump, for much of the race, dominated and was considered to do better when it comes to the economy among voters. Has that changed?
You know, it's really complicated right now. Donald Trump's his ratings on the economy have come down. They're still stronger than certainly by far than his handling of the pandemic or any other number of issues. But I think right now, you know, the pandemic, people are seeing the pandemic through two different lenses. They're seeing it either as a health crisis or they're seeing the pandemic as an economic crisis. So I'm not entirely sure that the polling is actually telling us what we need to know. For a lot of people on the Republican side, certainly amongst Donald Trump's base, They see the pandemic as being a problem of the Democrats trying to shut down the economy. So it's slightly difficult calculation to handle. But of course, the fact that the economy is not doing well, that the stock market didn't do well yesterday, that people are concerned about their jobs, this can't help the president, most especially amongst those voters who are in minority categories, amongst younger voters, and amongst older voters. The first two categories, younger voters, minority voters, are losing their economic opportunities is at a much higher rate than others. And so that really affects how they feel about the current leadership.
Leslie, great to catch up as always. Lindsay Vindra-Murray there of Chatham House. Thank you very much. For our audience worldwide, if you're just tuning in, busy morning once again this Thursday. It's been a brutal week for anyone long this equity market. Here's the story so far. Earlier this morning, we struggled to generate a bounce in the European session. We were positive for a little while. It did not hold. We rolled over. Similar story on the S&P 500. Futures had a nice bid, firm after a really rough session, up by around about 1% and change. We roll over to unchanged on the S&P 500. If we can whip through the markets just quickly, euro dollar briefly with a 116 handle, now 117.02. That bid has not returned to the bond market, though. I know a lot of you are discussing this on trading floors around the world or even at home remotely and over Zoom. Yields aren't coming in again, 0.77%. And to echo the words of Kathy Jones, of Lisa Abramovich and others out there looking at the same thing, the risk aversion is being captured, Tom, through foreign exchange once more, with that stronger dollar and stronger Japanese yen. And that metal currency gold now just breaking down, plunging, John, negative 13, 1866 on gold, distant from that 1900 level. John, as we look at Le Monde leading the coverage in France, Turkey responds, and of course, John, I'll let you discuss Turkey here, strongly condemns savage attack on Nice. The Minister of Foreign Affairs for Turkey says it is clear that those who have committed such a savage attack in a place of sacred worship cannot be inspired by any religious, human, or moral values. So, John, Turkey speaks after Nice. This morning's tragedy bringing those two countries perhaps a little bit closer together this morning, Tom. Dollar lira out with an 8 handle, 831. From London and New York this morning, good morning. Your economic data just around the corner. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
From New York and London, good morning to you all. The economic data just around the corner, seconds away. Alongside Tom Keane and Lisa Abramovich, I'm Jonathan Ferro. Your market action, futures unchanged on the S&P 500, waiting for claims, waiting for GDP. Some might argue the GDP data for the market, the economic historians, and the data coming from initial jobless claims will be for the investors, the traders. As we await that data, let's bring in Michael McKee, as we always do, and start with claims, Mike.
Claims coming out first, 751,000 during the week last week. That's down from 787,000, the initial print for jobless claims last week. So it does show some progress, but we're still at a very elevated level. Continuing claims now down to 7,756,000 from 8,373,000. But a lot of those people are going to be moving over to the lengthy continuing claims process because they've used up their 26 weeks. We're still waiting for the BEA to put out its numbers on GDP at this point. I guess
there's the number.
There we go, 33.1%, a little bit above the consensus of 32.0% on an annualized basis. However, the thing to keep in mind here with GDP is that the economy is not an annualized economy. It's a quarterly economy. It shrank by 10.1% in the first and second quarters together. So at 33.1%, we're looking at a 7.4% gain. So we're still in the hole by about 3%. The economy is still 3% smaller than it was at the beginning of the year. Right. We're looking for the breakdowns, but they haven't crossed yet. We're just waiting to see what kind of numbers we get out of that. But as has been pointed out many times, this is the largest quarterly increase in GDP ever, but it followed the biggest quarterly contraction in GDP.
Okay, Mike, you know, for the sophisticates that are out there that aren't up to speed like you as an expert, down we go big. This is the report of up we go big. Where are we on level right now, Mike? How far beneath the level trend that we had in February are we?
Well, I think you got to go back to January, Tom, because in the first quarter, the economy did shrink by 5%. And so at this point, we are still, well, if at 33% is 7.4%, we were down 10.1. So you've got 2.6, 2.7% smaller than we were coming into the year. Now, something else you want to keep in mind is that the economy normally continues to grow. And if we had grown at the same rate that we would have in 2019, an average of about 2.3% per quarter, you would have ended up with about a 65% annualized gain to try to make that up. So we're still well below where we would have been otherwise. That's about 3.6% more than otherwise we had gotten.
Mike, after these numbers, given the fact that they are better than expected pretty much across the board, you are seeing a little bit of a lift in futures, but not much. They're not really doing anything. What's more interesting to me is you're actually seeing Treasury yields bounce back. They had dipped a little bit, and now they are back up on the day. What leading leading indicator can we take from this data, given the fact that, as John rightly pointed out, the GDP figures, I will get my words out, are ancient history, and the jobless figures are similar, actually, at this point, given how fast the virus is moving?
Yeah, I think you make a couple of good points there, especially with the jobless claims figures. With the virus moving quickly, we're going to see additional targeted lockdowns, probably not something like we saw in Germany and France, but that probably means more people start to lose their jobs. It's also, if you've noticed outside, getting colder in New York and Boston and places like that. So we're going to see some of those restaurants that were open start to close up, and that's going to mean more jobless claims. And even if you don't agree with the level of claims, the actual number itself, the trend has been very flat. We're not seeing a lot of people going off that. We're still seeing a lot of new claims. Now, we do have some new numbers out, some of the breakdown coming out for the GDP numbers. Personal consumption was up 40.7% after falling 33.2% in the first quarter, and we're looking at the GDP price index up 3.6%. That was expected given the shortages of goods and the problems that we've had, but that's going to go down. People aren't going to look at a whole lot at that. Now we've got a good breakdown of the numbers coming out here, and I can tell you that non-residential fixed investment, the business spending number, 20.3% after declining 27.2%. So businesses not coming back quite as much as they lost. Personal consumption more than we lost. But again, remember the way this works, and Tom will tell you all about the math, that when you're coming from a lower base, the percentage change isn't as big. Government, we wanted to see this down 4.5%. Federal government spending was down 6.2% last quarter after rising 16.4% in the second quarter. That's the end of the PPP, and the small business loans goes away from federal spending. State and local government down 3.3% after a 5.4% decline, and that just shows you the hole gets bigger for state and local governments, the spending that they've had to do.
John Farrow, what's fascinating about this is how does Vice President Biden and President Trump, how do they campaign on a 33% lift in GDP? That's original American history.
They don't tell you it's annualized. That's how you campaign on that number, Tom Keene. You just don't tell anybody it's annualized, and you say it's set to continue.
We delivered a 33% economy.
Yeah, you know how it's going to go. You know how it's going to go. Mike, just to finish there, just a final point, if you can. The tailwind that we got from the fiscal package, the consumption numbers that we see right here, can you walk us through how much is left in the tank now so many, if not all of those programs have expired?
Well, we do have some significant savings still out there, but people are spending them down, and the spending numbers so far seem to suggest that we have definitely seen a slowdown. If you look at the GDP by a month-to-month basis, it was very big in May and June and then has started to tail off, and August, September were much slower, and October looks to be the same story. So at this point, the consensus has been for about 3 to 4% growth in the fourth quarter, as opposed, and that's on an annualized basis, as opposed to this 33.1%. So a significant slowing in the fourth quarter. And I think what you want to look at, perhaps to answer Lisa's earlier question, is the level of GDP at this point is higher than it was, but not still up to where we were. So it's going to be a question for the next president to figure out how to get us back to where we started from.
Michael McKee with two important reports there before the election. Right now, we will digress and move to David Leibovitz of J.P. Morgan Asset Management, of course, trying to bring in a strategy to adapt and adjust to a little bit of a lift in the market in the last 10 minutes. David, I've got to go to the arch question. I mentioned this early this morning. So many of the pullbacks have been truly stochastic, pointy. Down we go, and we come right back up straight. Does this have a stochastic feel to you, or is there something different about this pullback?
So I think that there are three issues that have really driven the pullback, and there are three somewhat familiar issues. So if we get resolution there, I do think things could bounce back quickly. Unfortunately, I do believe resolution is going to take time. The first thing that's going on is that the virus growth is reaccelerating. You're seeing it in Europe. I think that this is much more about the lockdowns that have been imposed in Germany and France, and a little bit of, wait, will this happen to me too, than it is necessarily about the impact of the virus on the health of the population. population. The second thing, and I think we talked about this a few weeks when I was on with you all, policy. Policy in the United States on the fiscal side continues to come up short, and essentially that is the bridge that needs to continue being built to get us to the other side of this pandemic more broadly. And then I think the third thing that's gone on here is that there was a lot of good news priced into the market. When we look at the way that stocks have responded to better than expected earnings reports, I mean, they haven't really done all that much. And so there was a lot of good news. There was an assumption on the part of a lot of investors that we weren't going to have another hiccup with the economy. We weren't going to have another hiccup with the virus. And what we're seeing is that that's not necessarily the case. And so I do think that we will bounce back, but it may be a little bit more challenging than we've seen over the course of the year thus far.
David, what do you make of the move in treasuries, or the lack thereof, the fact that yields have been so resilient and actually moved higher even in the face of equity volatility?
So I think a big part of it is when you decompose what's moving Treasury yields, it's really more about an increase in the term premium than it is about an increase in inflation expectations. And what that represents to us is a little bit greater uncertainty around the direction of travel broadly. And, if we were seeing yields back up on higher inflation expectations, that would be a signal to us that investors are pricing in better economic growth. I think that this backup in yields that we've seen and the firmness in yields that we've seen represents a fairly wide distribution of outcomes that could materialize over the course of the coming months. And obviously that's feeding through into the performance of FX and then more recently the equity markets more broadly.
When you read your economics at JP Morgan, do you filter in a disinflationary trend, or are you people on board a true inflation to come?
So I think it's a good question, and what I would say is that for everybody within the walls of Morgan, with my opinion, there's somebody with the opposite opinion. In the short run, we don't view inflation as a risk. We think output gaps are wide, unemployment rates are elevated, and we would be surprised to see inflation pick up here in the very short term. Long term, and there's a lot of debate on this, we do think that inflation will remain in check, and I am more in the disinflationary camp. We obviously have seen this massive debt build over the course of the past couple of months, but when we layer on top of that things like continued technology adoption.
David Leibovitz there of JP Morgan Asset Management. Forgive me, David, just some cracks in the line there as you were completing that last line. Forgive me, David, I'm sorry. Let me get you some economic data very quickly. Initial jobless claims coming in at 751K. That's down from the previous read of 791. The median estimate was 770. So that's a decent surprise. Upside surprise on a GDP figure. Best way to think about this, shut down in 2Q, negative 31.4%. Reopening in 3Q, that mechanical reopening, driving an annualized jump of 33.1%. The momentum and sustainability of the improvement. What does Q4 look like? That's the question on many people's mind. Looking to Europe right now specifically, and to the United States too. As we count you down to two things, an ECB decision 4 minutes away, and the opening bell around about 45 minutes after that. Let me get to the price action of the moment. Just a little bit of a bounce on S&P 500 futures, turning marginally negative and now positive, up about 7 points. We advanced, Tom, about 0.2%. We saw that 116 handle on euro dollar. 117.01 is where we trade right now.
Right, yes, no question about it. But there are these telltale signs across the Bloomberg in equities, bonds, currencies, and gold. And I'm sorry, gold is broken down again. I'm not sure what it means, down $12. 1867 an ounce, John. That is a really interesting statistic to follow through the day, along with oil down almost $2 a barrel.
Coming up on this program, more coverage of the market, an ECB decision, and we'll catch up with Alberto Gallo of Algebris Investments. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Another suspected terror attack in France today, the third one in the last 2 months in the city of Nice. Police say an attacker armed with a knife killed 3 people at a church. The suspect was wounded by police whilst being arrested. Authorities say they believe he acted alone. France has been on high alert for possible Islamic extremist violence. Last month, a terrorism trial began in 2015, killings at the satirical newspaper Charlie Hebdo and a kosher supermarket. It's the 5th time this year that Louisiana has been hit by a tropical storm. Zeta came ashore there as a hurricane and battered New Orleans before heading into Mississippi and then Alabama. It's now been downgraded to a tropical storm. About 2 million people are without power today. At least one person was killed. In Germany, Chancellor Angela Merkel has defended her decision to once again severely restrict movement. She told Parliament the country is in a dramatic situation with the rapid spread of the coronavirus. Starting Monday, Germany will impose a month-long partial shutdown. And what has the pandemic meant to your business if you're heavily focused on real estate? Bloomberg's Eric Schatzker spoke to the CEO of Brookfield Asset Management, Bruce Flatt, about the outlook for cities, retail, and working from home.
You go out on the street and ask 9 out of 10 people, they will say they want to work from the office. And the fact the efficiencies are not even close when people aren't in the office because you get distracted with 100 of other things.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
From New York and London, this is Bloomberg Surveillance. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, moments away from an ECB decision out of Frankfurt. I'm going to run you through the price action, then run you through that decision. In about 46 minutes' time, you'll hear from the ECB President, Christine Lagarde. So this is the setup going into the decision. A couple of things will happen. We'll get the rate decision. We'll get some language around the guidance, the asset purchase program, all of that good stuff. Then a little bit later, you'll hear from the ECB President, and you'll get the language around the balance of risks about the outlook. That's where the ECB President, the Governing Council, can maybe lean a little bit more dovish given the developments of the last couple of days. Euro dollar going into this, 116 handle a little bit earlier. Right now, 117.04. If you switch up the board into the bond market, I want to give you a brief feel of how the bond market in Europe is set up ahead of this. Going into it, really nice auction of Italian 10-year debt a little bit earlier this morning. Your yield 0.739% on an Italian 10-year. And there's the story for the ECB decision, unchanged. The main refinancing rate at 0%, the marginal lending facility at 25 basis points, and the depot rate at negative 50 basis points. Risks clearly tilted to the downside. I brought up that balance of risk around the economic outlook. There it is. Risk clearly tilted to the downside. Euro dollar off the back of this, basically unchanged, still in and around 117. QE will run until shortly before interest rates rise. That's going to be a long, long time. The ECB communicating that they will reinvest the maturing pandemic emergency purchase program bonds at least through the end of 2022. The December forecast will allow a clearer assessment of the path forward. We mentioned this a little bit earlier on. The ECB and the Governing Council typically would like to adjust monetary policy when they've got those forecasts. Those forecasts do not come until December. So going into this one, guys, the euro unchanged, 117.00 off the back of the decision. Negative on the day, down by 1/3%. The story, not about rates. It will be about the asset purchase program. And any hint, any clues from the ECB president in about 45 minutes' time around how they back up those forecasts when those forecasts get downgraded, Tom. What do they adjust? What's available? Where's the tease? We all know the balance of risk is clearly tilted to the downside given what's happened in the last 24 hours. What we want to know is how they adjust monetary policy ahead of that.
And what's interesting here, John, and of course for American viewers, is confusion here over the timing of this Thursday morning. Daylight savings time for John Farrow. He demanded it in England. And so we've got a shift in timing here of when we see the announcement and also when we see the press conference as well. Right now, we want to speak with Alberto Gallo with Real Money at Risk at Algebris Investments. He has been wonderful for us on opportunities out there in fixed income. Alberto, there must be great comfort right now in cash. For Alberto Gallo, is cash an asset?
It is, and if interest rates are really so low, the opportunity cost of holding a bit more in liquidity is much lower because you're giving up very low yields. Many government bonds are at negative yields. So we don't want to be invested all the time. We want to be invested when there's an opportunity. And, you know, the sell-off that we're seeing over the past few days is starting to become an opportunity in some areas because the backstop by central banks and governments is very strong. There's a lot of discussion about what the ECB will do. They can increase quantitative easing. They can also increase the TLTRO, so the loans that the ECB gives to banks in size or maturity. But also Germany, very important, they announced a support for small businesses for up to 75% of their revenue. So the government will pay anything up to 75% of revenue lost during the lockdown. So these things are very powerful, and we've got fiscal policy as well, not just central banks.
What's so interesting here, and Alberto, I think we can take it right over to other central banks, including Mr. Powell. The headline, December forecasts will allow recalibration of stimulus. Are you investing and putting capital at risk, understanding that Madame Lagarde may change the rules of the game in December?
So we're having a virus resurgence today, and it's going to come across Europe and probably also in the U.S. But the reaction function of policymakers will be pretty strong in December with more quantitative easing from the ECB, potentially also from the Fed, and then we have the vaccine. So short term the situation is bearish, but medium term, if you just look 2 months away, you have these very strong backstops to guarantee the survival of the economy. So it is a very positive environment for selling puts on the economy, so for buying credit. Sovereign bonds don't have a lot of value here, so we don't really want to buy what the ECB will buy, because bonds are already very negative. BTPs in Italy offer very little yield. And if governments continue to spend, at some point, you could see some widening. Yesterday and the day before, U.S. Treasuries were actually widening as the S&P was falling. So we don't have safe havens anymore. We either have cash, and then we have risky assets that may or may not become attractive. And we prefer credit here over stocks.
You prefer credit. There's a lot to unpack here. The idea that the ECB is pushing investors out of these safe assets because they offer no value and no hedge. At the same time, credit instruments don't provide a hedge either, because companies can go bankrupt and these investments can get wiped out. What's the bet here? That the ECB is going to delve deeper into credit for their purchases, or just that the economy will eventually revive and that you will get at least some of your money back versus equity?
So there is no hedge. That's the short answer. So instead of building a portfolio with stocks and government debt, as in the traditional 60-40 portfolio, what we are doing is to have a bit more cash instead of sovereign debt. And instead of stocks, we're going higher in the capital structure. So rather than having equity, which puts you as the most junior stakeholder in a company, we're going a bit higher up in bonds, especially bonds that give you some collateral to assets of a company, maybe ships in the case of a cruise company, airlines, airplanes in case of an airline, and so on. And you can get paid very high yields with some protection in those instruments. So the rationale here is governments are issuing debt at very low levels, negative rates in case of Germany, and they're giving this money to companies to help them to survive. So there is no safe haven, but you have a fiscal policy backstop for the largest firms, and in the case of Germany, even for the smaller ones. So we're not worried about a massive increase in defaults in Europe. There may be some sectors that are weak, but we know governments are behind and the economy will survive, and it makes more sense to lend money to these companies than to lend money to the state at negative rates.
Alberto, when you talk about holding some cash,
I'm placing a new order to sell short euro. The price I'm looking for 117.15. Okay.
Over half before the sell-off, we had 55% in the fund I run in January, February, and currently we have around 30%. Generally, we don't want to be below 10%, but we can compensate with investments that make more money in the part that is invested, rather than buying, for example, bonds at 2%, where you can make 2 and you can lose 10 if you're wrong.
Alberto Gallo, thank you so much. After this important ECB announcement with Algebris Investments, we greatly appreciate that this morning. Really all over the place. You got a little bit of euro strength, 117.12. Lisa, I wanted to mention here Liz Ann Saunders of Charles Schwab, of course, a good friend of the show who does brilliant acute work. She is on fire out on Twitter this morning. Bring up the chart if you could, O'Reilly. This is an important chart. This is the actual level of our animal spirits, our nominal GDP. And Ms. Saunders, of course, shows a little pullback here. And Lisa, you know, down we go, and we just really haven't come back to that trend line established in 2009.
Yeah, and you know, people talk about, you know, you see this huge rebound, but it comes down to math, right? If you drop 33% and then you gain 33%, you're not back to where you were because what you're coming is off a smaller base, right? And that's really what we're experiencing. Bloomberg Economics, before the GDP number came out, is expecting a 3.3% total year contraction in Q4 versus last Q4, which would be the worst going back to the Great Depression. So a big hole that we still haven't filled.
Now, Liz Ann Saunders doing yeoman's duty there this morning. John Farrell, what an extraordinary morning. You will lead it on to one of your next properties. What will you focus on?
Well, I think the ECB news conference in about 34 minutes' time, Tom. We talked about this repeatedly over the last couple of hours. The ECB typically likes to change monetary policy around the time that they produce their new forecast. That will happen at the next meeting in December. And it's pretty clear what they're communicating here with the following headline. The forecast will allow for a recalibration of stimulus. And where you see the move this morning is not foreign exchange. There's a bounce in the euro. Where you see the move is in the Italian debt market. BTPs, yields coming in, another 4 basis points on a day to about 0.72%. And I think the message from the ECB has got to be clear here. They need to keep financial conditions loose. They need to keep the availability of this bond market open to governments. They're going to have to do a whole lot more as these economies introduce more restrictions, Tom. It's a tough winter ahead. The ECB has already done a lot. This market's looking for it to do a little bit more. And I think today in 35 minutes, the ECB president is going to have to give a strong hint as to what that recalibration of stimulus actually means.
John, Lisa and I will let you and your entourage move on to the Open. He moves over to another side of Queen Victoria Street to the beautiful set that he has there for the Open. And we do that, of course, on this day, 5 days to the election. It's amazing, Lisa, how 5 days to the election, we touched on politics, but boy, was it a sideshow to all of the markets.
Yeah, and the market's really responding to the virus. I will say John's point, though, on the BTP is really interesting, especially given the fact that Italy just sold debt at record low borrowing costs, backstopped by the ECB and the people who are...
Well, order sell short removed, yeah? I didn't have a chance to get into this position, okay? So the order sell short removed.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes away from the opening bell with equity futures just about positive. Up 8 on the S&P 500. We advance 0.25%. We begin with a big issue. Markets showing some cracks this week as the coronavirus surges across Europe with daily infections hitting record highs in the UK, Italy, France and Germany over the past week. The EU's two biggest economies responding with tougher new restrictions to curb the recent spread, shutting down bars and restaurants for the next 4 weeks, tempering investor sentiment and threatening the economic recovery.
We're seeing a tremendous pickup in cases.
A significant surge in Europe.
An increase in infections across the globe.
The COVID second wave.
To the extent that you had a second wave,
they're going to shut things down.
That will prolong the misery.
Economic data and the recovery start to slow.
We're seeing some countries lock down again.
It's going to be a headwind for growth estimates in the fourth quarter.
The economy will look fundamentally different after this is over.
The services part of the economy is really in trouble.
In Europe, it's often one step forward, 2 steps back.
There is this new realization that actually things could get quite bad this winter.
Right now, all the question marks are in front of us, not behind us.
Joining us now on the story, Bloomberg's Guy Johnson here in London. Guy, 30 minutes away from ECB President Christine Lagarde. Investors looking for a reaction, they're getting it.
Absolutely. They are going to need to see something from the ECB today. It looks like we are ultimately likely to see the action coming in December, but a very strong hint to that action will need to be delivered today. Draghi's done it in the past. He's basically pre-committed the ECB to taking action at a subsequent meeting. You wonder whether or not Christine Lagarde will ultimately have to follow down that same sort of course of action, John, because the data are likely to be affected. You talked there about the restrictions that are being imposed in the two biggest economies, France and Germany, but Spain posting record numbers, Greece posting record numbers, Italy posting record numbers, Portugal posting record numbers. It's across the continent. Q4 GDP was expected to be flat for the Eurozone. The risk is now significantly to the downside on that number, and there does seem to be some policy reaction. But the caveat to all of this, John, remember, is the ECB lending survey that we saw out earlier this week, which indicated that some of the liquidity that the ECB is providing is getting trapped within the financial system. Banks are tightening the lending standards just at the point at which the virus is picking up. And I think the market is surprised how strong the second wave is. The expectation that if we got a second wave, it would come, but it wouldn't be as strong as the first. I think that is now being shown to be wrong, John. This second wave looks as if it's going to be equal or greater potentially than the first wave experienced.
Well, Guy, let's read between the lines and what's about to happen here in Europe at the moment. 6, 7, 8 months ago, ECB President Christine Lagarde made a mistake. She said, we're not here to close spreads. Isn't that what's happening now? This is an ECB that's basically saying that's exactly what we're here for, with a tough winter ahead.
Absolutely, and you've seen what happens with BTPs. You were talking about it earlier on surveillance. BTP spreads are being reasonably well behaved. They picked up a little bit over the last couple of days, and I think that will send a little bit of a warning to the ECB that this is something that they can't mess around with. Those spreads need to remain tight. You cannot go back to the situation where we were concerned about redenomination, John. Politicians have largely dealt with that. It's the move earlier on this year to create
creates common risk across Europe, certainly put pay to that. But if we get back into a situation where we do see spread widening in Europe, that takes us back into the dark days of the European crisis. The ECB cannot allow, the ECB cannot tolerate that happening. It needs to be very clear that it will not tolerate spread widening here in Europe, quarter periphery.
Hey, Guy, great to catch up. Guy Johnson there, here in London. Just for a guide of what's about to happen here, in about 27 minutes' time, we'll bring you that ECB news conference. I'll throw to that. Guy Johnson will pick up on the other side. Going into it, to the opening bell as well, 27 minutes away. Equity futures with a bounce up 9, up a third of 1%. But it's the breakdown in Europe that continues. Euro dollar just about holding on to a 117 handle. On the price action, here's Katie Lyons.
Well, John, equities are trying to gain a footing after the worst sell-off for the Dow and S&P 500 since June yesterday. And in Europe, that rebound not taking shape this morning. We've rolled over now down about 0.3% on the stock 600. Here stateside, though, helped out by better economic data after a bumpy session. Futures are pointing to a modestly higher open. As you said, S&P 500 E-minis up about 9 points right now. But that would only recover a small fraction of yesterday's losses, John. Of course, the equity sell-off yesterday, broad-based. All 11 sectors in the S&P 500 down by at least 2.4%. 490 of the 505 names in that index were lower. The thing about it is, it was largely confined to equities. If you look at any of your traditional hedges, those safe havens you would expect to get a bid, nothing happened. Your 60-40 portfolio not doing what it was supposed to be doing. Treasury yields actually ended the day higher in the Wednesday session. Similar thing shaping up this morning. Treasuries go nowhere. Really, you're flat for sovereigns across the world. Boons, gilts, JGBs, all basically doing nothing. BTPs may be the exception. You can thank the ECB mostly for that. So where does this all leave us, John? If you widen it out and take a look at what has happened on a year-to-date basis, yesterday aside, big tech still basically where you wanted to be. The NASDAQ 100 still higher by near 28% so far in 2020. China holding up fairly well as well. The recovery story there has the CSI 300 up about 17%. Where you don't want to be, though, John, Europe down 18% year to date. And with economies like Germany and France heading back toward that lockdown story, that could get a whole lot worse, John.
Europe brutal. Kelly Lyons, thank you very much. In about 10-15 minutes' time, we'll catch up with the Europe bull, Jay Pawlowski of TPW Investment Management. Looking forward to that conversation. For crude, this is your headline right now. Brent crude, a drop below $37 a barrel. We've had a rout in the crude market this morning, the lowest level since May. Equity futures holding up in positive territory, but there's some dislocations cross-asset elsewhere. Here's Invesco's Alessio De Longis expecting the economy to overcome a resurgent coronavirus, writing the following: the global business cycle remains solidly in a recovery regime with growth below trend and expected to improve over the next few months. Alessio joins us now, 24 minutes away from the opening bell and that news conference with Christine Lagarde. Alessio, I'm not sure when you wrote that. I just wonder if you still feel the same way this morning. Please reply.
Thank you, John. That was written about a month ago. So now let's clarify. I think we are certainly, we actually are. This week we've been revising our growth projections down meaningfully so for the European continent, which at this point, talking about a double dip is the base case for Europe. We are extrapolating some of that decline also to the U.S. in the anticipation of a similar pattern of rising COVID infections, and that obviously takes down a little bit growth for the globe. Now, I think it's when we talk about time horizons, that global recovery, I think, remains solid in place if we look beyond the next 2 quarters, depending on an investor's time horizon. But I think we need to prepare for a Q4, Q1 bumpy ride ahead. And what will be critical there is to your point, the ongoing and proactive support of policymakers helping investors to look through the next couple of quarters.
Just seems, Alessio, the great unknown here is not Europe, base case double dip. We're seeing it play out. It's not China, base case recovery continues. It's the United States. And you mentioned something important. You're extrapolating out the weakness in Europe from Europe to the United States. Alessio, what are you looking for?
Well, it's unlikely that this time around the contagion will transmit from Europe to the United States through the means of travel. Obviously, we're much better prepared than that. I think Europe is more of a leading indicator of what can happen and what is happening in the large part of the United States as the cold weather comes in and people are forced to bring life more indoors. So What am I looking for? We're looking for the actual softening in the data, some leveling off in the data, similar to what we have seen recently in Europe. Even just this morning in the Eurozone, we saw the sentiment index survey flattening out completely, which is unlikely to happen usually in this type of V-shaped recoveries. A pattern similar to that in the US. But to be honest, what is more important is to see how growth expectations will change. If we have very proactive fiscal and monetary policy support, investors are able to look through the softening in the data. So in that regard, to be honest, the US election will be a more important outcome. We need to see over the next week or two how that plans out. And if indeed we get a blue wave, if we can get a material expectation for large infrastructure spending, I think that can change the equation for growth expectations in the US.
Alessio, let's make some calls. Let's make them right now. In foreign exchange, euro dollar, clean breaker 117. Dollar strength, back with a vengeance this morning in the last 24 hours. Crude down 5-6 percentage points. 35 handle on WTI, 36 handle on Brent. Alessio, walk me through your thinking, cross-asset, capital allocation decisions right now. Where do you want to put some money to work?
In the equity space, emerging markets are continuing to provide the best opportunity in my mind. Also, during the recent sell-off, EM equities have actually outperformed US and international, which is a very good sign. I think credit markets remain very well supported. We remain very overweight credit in an environment where we're going to derate cash flow news expectations around earnings growth. But monetary policy and liquidity conditions remain very ample. Credit can be expected to do very well and potentially better than equities over the next couple of months through this bumpy ride. Government bonds, not really much to move the needle there. Some ongoing weakness in commodity markets, I would say. And we stick our guns with staying with value and smaller capitalization stocks for now, even though the current environment is a bit challenging. But that's where we see the most attractive valuations and opportunities if you want to navigate through the next couple of quarters.
That is a trade for the brave, given what's playing out this morning. Alessio, great to catch up, sir. Alessio De Longis, thank you very much. Going into this market open, 20 minutes away, equity futures stateside, just about holding up in positive territory with your movers going into the opening bell. Here's Abigail.
John, well, after yesterday's brutal sell-off, we do have U.S. futures up slightly, but off the highs. Let's take a look at what's working, then what's not. As for what's working, we did have some nice earnings reports yesterday. So Pinterest absolutely soaring, set to open at a record high. They beat estimates in a big way on boosted digital ad sales. The street's very positive, as you would imagine. We also have Ford trading higher. They put up a surprise beat of estimates on their pickup and SUV strategy. Where there's weakness, though, John, energy, as you were mentioning, Brent crude oil, European crude on the virus resurgence, those German and France lockdowns. We have crude oil below, Brent crude oil below $37 a barrel to the lowest since May. So we are seeing weakness now in the energy complex. This was one of the weakest, the second weakest sector yesterday. Chevron down 0.9%, and we also have Royal Dutch Shell down sharply. Now, yesterday's worst sector, though, John, as you know, technology, Apple, Amazon, Google, Facebook, all those stocks down. Today, ahead of earnings, after the bell, these stocks are higher. The big question is, though, all of these stocks on the year up in a big way. So they are priced to perfection. Expectations are high. The bar is high. Can they produce? Yesterday, this year's defense, not so defensive, John.
Abigail, thank you. That's the key story for me. Bottom of the pile in yesterday's session, the S&P 500. Big tech, as Abigail points out, just a huge day coming up. Market open 18 minutes away. We'll hear from the ECB President Christine Lagarde. Then later on this evening, after the close, big tech reports. Coming up on this show, a robust consumer keeping the U.S. economy on solid footing. But for how long? That conversation up next with Jay Pilowski of TPW. From London and New York this morning, good morning. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Things are definitely worsening. I think we're definitely going to see a substantial slowing of growth, and you can't rule out a prospect of a double dip if things get much worse. The Federal Reserve could clearly do more. The real question is how much of an impact would it actually have on the economy? I would say at this point, not very much.
Former Fed President Bill Dudley warning the central bank is running out of firepower to support the recovery. This is analysts warn that today's record GDP growth could be a short-term surge. Speaker Nancy Pelosi continuing to push for another round of stimulus, hoping this week's sell-off will push the president to make a deal. Saying the following, as he sees the market react to the spread of the virus and sees the market react to the fact that we do not have an agreement which could inject resources into the economy, hopefully now he will come to the table in a serious way. Michael McKee joins us now, Bloomberg International economics and policy correspondent. Mike, let's just talk about it, shall we, sir? Your thoughts on what we are and may not get from fiscal stimulus authorities a little bit later.
Well, I don't think you're probably going to get anything until after the election. That's pretty much dead, but maybe after the election. What we got today in terms of GDP helps us reset what expectations are and comparisons are. You showed the numbers, 33.1%, the largest quarterly gain ever in GDP, but it followed the largest quarterly decline ever in GDP. And on an unannualized basis, the economy grew by 7.4% during the quarter after falling 10.1% in the first 2 quarters of the year. Business spending was booming. Equipment investment rose 70.1%. Consumer spending much better than expected, 40.7%. The national federal government spending down 6.2% after a 16.4% gain the quarter before. That's because the PPP money went away. State and local governments down 3.3%. They're still taking it on the chin. Inventories barely moved. They were down $286 billion, just a $1 billion decline. So that helped a little bit. But where does this leave us going into the lame duck session of Congress and into next year? Well, you have to consider not just what GDP was at the end of 2019, but what GDP would have been. The average growth rate quarterly in 2019 was 2.3%. The blue line shows you where we would have been if not for the pandemic. So we're still way below that. Quickly mentioned jobless claims, 751,000, down from 791. That 791 was a revision, and so we could look to this week to be revised as well, still very high.
Michael McKee, thank you, sir. Let's bring in TPW's Jay Pawlowski, shall we? Jay, great to catch up with you, sir. Just want to touch on a fiscal stimulus thing, which, to be quite honest with you, feels totally ridiculous right now, Jay, and just feels like political posturing going into the election. In fact, I would say it's felt that way for the last couple of weeks. That's the message for the campaign trail from Speaker Pelosi. Would you agree, Jay?
100%, John. Look, I think investors are searching for clarity. Our focus has been on clarity in the big three: elections, stimulus, and COVID vaccines. And I think yesterday might have been the point of maximum uncertainty, notwithstanding the speaker's comments. Stimulus is going to be dependent on the elections. Elections are only 2 3 trading days away, and I think we could have a day like yesterday on the upside within the week.
Jay, you've been so constructive on this recovery. You've been so constructive on Europe as well. There are clear headwinds developing into that trade. France, Germany, more restrictions. Why do you maintain the confidence, Jay?
Well, John, look, it's all a matter of price, right? I mean, I look back about a month ago, I was on the show, and we talked about European banks as an example, right? I called them a screaming buy. They went up about 8% in the intervening 3 weeks. In the past week, they've given it all back. They're within pennies of the ETF, within pennies of where it was a month ago. What's changed in the intervening month? Better results. Virtually all the big banks in Europe reported better than expected earnings, and the stocks are flat. The market broadly is back to the spring levels, 5 months ago levels. But the economy and mobility, real-time mobility indicators are much, much better than they were in the spring. And so, look, trades, yeah, Europe is the problem child of portfolios for folks who have exposure there, and that's an issue. But the question is, what's in the price? And I think quite a bit is in the price.
Well, Jay, what's the benchmark? It's all relative. If you compare now to where we were in the spring, of course, the mobility data's better. Is it improving sequentially week on week, month on month still? I would say in various places it's not. You can see in Germany before the latest restrictions, in restaurant dining was already rolling over. Consumers were already disengaging in Europe before this even happened, Jay. So are we improving versus March, or are we improving versus September, versus a week ago?
Right, but prices aren't where they were in September, John, right? So, yeah, I agree with you. The economy is softening in Europe. That's a challenge. It's doing better elsewhere. In Asia, for example. I mean, we continue to be of the mind that there's going to be a boom in 2021. We need to get through U.S. elections. We need to determine the stimulus. We need to get a vaccine. I think all of those things are going to be visible in the next several weeks to the next month or two. Europe is a cyclical play. Japan is a cyclical play. Emerging markets are a cyclical play. U.S. is tech heavy. We've talked about it before, right? If we get a vaccine, we get higher interest rates. It catalyzes the rotation trade, capsizes the long duration bull market, and deeply affects tech in a negative way. I think technology is topping out. As you pointed out earlier, earnings have come in. They're coming in tonight. They haven't been very great. To me, the opportunity continues to be exposing oneself to cyclicals, to value, to small caps, to non-U.S. developed, to Asia, and to commodities, and to credit. I think energy right here is something to be interested in and to look to be a buyer of. If you have a constructive view on the global economy in 2021, I can pretty much assure you that Brent and WTI are not going to be at $35 and $37. Those are opportunities, John. When do you exactly step into them is a question. But at a point of maximum uncertainty, which I think we probably hit yesterday, that's when you should be looking to be a buyer if you have a 3 to 6 to 12-month outlook, and that outlook is constructive.
Maximum uncertainty. I'm just not sure whether we've seen peak pain this quarter just yet, Jay. That's the conversation we can have next on this program. Coming up, we'll continue the conversation with Jay Pawlowski of TPW, an ECB rate decision behind us, a news conference in front of us just around the corner. In a market 7-8 minutes away from the opening bell in New York, S&P 500 futures just about holding in there as things roll over this week over in Europe. From London and New York, this is Bloomberg.
Europe were first in before us, they got out and then they're back in. We are not doing a great job of living with COVID. And COVID is the great unequalizer. The strong get stronger, the weak gets weaker.
New restrictions in Europe threatening to throw the economic recovery into reverse. The price action set up as follows. 5 minutes out from the opening bell, equity futures are positive on the S&P 500. We continue to roll over in Europe, though, for a fourth straight day of losses. In the FX market, that dollar bid is back. Euro dollar south of 117 a little bit earlier on this morning, a 116 handle. If we switch up the board, we'll go cross-asset very quickly. I'll give you a feel of the bond market. Bid comes into the Italian bond market as we await Christine Lagarde and the ECB in about 5 minutes' time. In the bond market, in the Treasury market, yields unchanged at 0.7744%. Dollar yen not doing much either. Dollar yen 104, spot 35. That's the story of the market so far. Still with us, Jay Poloski of TPW Management. Jay, we talked about it briefly. Let's have that chat now as we work our way through the next 5 minutes towards the opening bell and the news conference. Yes. Have we reached peak pain in this market? I think many people would argue no, Jay. Why do you think that might not be the case?
Well, it's all about clarity, John, right? Investors hate uncertainty. And we are completely uncertain at this point, or some people are, about the U.S. election, the outcome of the election, which is only 2 or 3 trading days away. The outcome of the election will determine the degree of stimulus, right? If we have a blue wave, we'll get lots of stimulus. If we have a Trump victory with the Republican Senate, we'll get moderate amounts of stimulus. If we have a Biden win in a Republican Senate, gridlock, we'll get very little stimulus. And then on the vaccine front, we are weeks away, most likely, of getting a sense of whether some of the promising candidates are actually effective. And then we have to distribute them. But the markets will front run that. So I really do think it's an issue of clarity. We're very close. Maybe yesterday was not the day, but a 90% down day, cross asset, everything was down. That speaks to me of a lot of pain and a lot of uncertainty. And where we go from here will be dictated by the events of the next several weeks, in my opinion.
Well, Jay, I guess that the central banks have redefined what pain actually is. High yield spreads are out by what, 30 basis points this week, 40 basis points this week. Is pain now 510 basis points on high yield spreads in the United States? Is that what it is?
Well, I think, look, John, the issue, one of the things we're going through are regime shifts across the board. One of the largest ones, most important for investors, is the shift from monetary policy to fiscal policy. Monetary policy is effectively out of bullets. They can buffer, and I think to your point, are buffering the credit markets. But if we get the recovery that I expect, we're going to start a bear market in long duration debt. I think the big question is, where does the Fed and the ECB come in to cap rate rises? I expect the 10-year in the U.S., for example, to trade around 1.5% in the next 6 months. I expect the Bund to trade close to 0 in the next 6 months. If that happens, we're going to have a very different discussion. But let's be under no misunderstanding. The key driver here in going forward is going to be fiscal policy, is going to be health policy, and I think both of those moving in the right direction with Asia that continues to be robust, first into COVID, first out, moving forward pretty aggressively. China's going to be a big driver. So, you have to pick and choose your spots, but my view is we can have a boom in economic activity next year, led by stimulus, led by liquidity, led by a vaccine, supported by consumption in both the U.S. and China. And Europe is a big play on that. So Europe is the problem child, but every portfolio has at least one or two, and you've got to manage that. And that's really the challenge in these particular markets on days like yesterday and today. Are you a buyer or a seller? Are you looking to buy energy, or are you trying desperately to sell it? A lot of it depends on your setup. Unless you're a day trader, which I'm not, 6 to 12 month view, stimulus, vaccine, you have to be constructive.
Well, Jay, you and I could talk all day. The ECB President, Christine Lagarde, is going to walk into a room in a moment and hold a news conference. Before we get there, let me just pick out one of the many calls that you just made on a 10-year Bund. Back to zero. We're negative 60 basis points right now. ECB President Lagarde's about to come out in a moment and potentially tee up more QE in December. There's a depot rate at negative 50 basis points, which is not going to change for a long, long time. How do you get bond yields back to zero? I think that is the greatest unknown in this bond market right now. Jay, we've got to leave it there. Jay Pawlowski of TPW Management, the ECB President, Christine Lagarde, sitting down to take hold of this news conference just as the market opens stateside. The story of Europe so far this week has been a difficult one. The two largest economies in the Eurozone, France, Germany, introducing new restrictions on their economies. This market has been battered. The peripheral bond market hasn't, because they look towards this person right here and this institution to do more. This institution teeing up action in December. Will we get a strong hint of that in today's news conference? I'm pleased to say we can turn now to Frankfurt, Germany, to hear from the ECB President herself, Madame Lagarde.
Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Executive Vice President, Mr. Valdis Dombrovskis. The resurgence in coronavirus infections presents renewed challenges to public health and the growth prospect of the euro area and global economies. Incoming information signals that the euro area economic recovery is losing momentum more rapidly than expected after a strong yet partial and uneven rebound in economic activity over the summer months. The rise in COVID-19 cases and the associated intensification of containment measures is weighing on activity, constituting a clear deterioration in the near-term outlook. In fact, while activity in the manufacturing sector has continued to recover, activity in the services sector has been slowing visibly. Although fiscal policy measures are supporting households and firms, consumers are cautious in the light of the pandemic and its ramifications for employment and earnings. Moreover, weaker balance sheets and increased uncertainty about the economic outlook are weighing on business investment. Headline inflation is being dampened by low energy prices and muted underlying price pressures in the context of weak demand and significant slack in labor and products markets. The monetary policy measures that we have taken since early March are helping to preserve favorable financing conditions for all sectors and jurisdictions across the euro area, thereby providing crucial support to underpin economic activity and to safeguard medium-term price stability. At the same time, in the current environment of risks, clearly tilted to the downside, the Governing Council will carefully assess the incoming information, including the dynamics of the pandemic, prospects for a rollout of vaccines, and developments in the exchange rate. The new round of Eurosystem staff macroeconomic projections in December will allow a thorough reassessment of the economic outlook and the balance of risks. On the basis of this updated assessment, the Governing Council will recalibrate its instruments as appropriate to respond to the unfolding situation and to ensure that financing conditions remain favorable to support the economic recovery and counteract the negative impact of the pandemic on the projected inflation path. This will foster the convergence of inflation towards its aim in a sustained manner in line with its commitment to symmetry. In the meantime, we decided to reconfirm our accommodative monetary policy stance. We will keep the key ECB interest rates unchanged, We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to, but below 2% within our projection horizon. And such convergence has been consistently reflected in underlying inflation dynamics. We will continue our purchases under the Pandemic Emergency Purchase Programme with a total envelope of 1,350 billion euros. These purchases contribute to easing the overall monetary policy stance, thereby helping to offset the downward impact of the pandemic on the projected path of inflation. The purchases will continue to be conducted in a flexible manner over time, across asset classes, and among jurisdictions. This allows us to effectively stave off risks to the smooth transmission of monetary policy. We will conduct net asset purchases under the PEP until at least the end of June 2021, and in any case, until the Governing Council judges that the coronavirus phase is over. We will reinvest the principal payments from maturing securities purchased under the PEP until at least the end of 2022. In any case, the future roll-off of the PEP portfolio will be managed to avoid interference with the appropriate monetary policy stance. Net purchases under our asset purchase program will continue at a monthly pace of 20 billion euros, together with the purchases under the additional 120 billion euros temporary envelope until the end of the year. We continue to expect monthly net asset purchases under the APP to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates. We intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time past the date when we start raising the key ECB interest rates, and in any case, for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. We will also continue to provide ample liquidity through our refinancing operations. In particular, our third series of targeted longer-term refinancing operations remains an attractive source of funding for banks, supporting bank lending to firms and households. Let me now explain our assessment in greater detail, starting with the economic analysis. Euro area real GDP contracted by 11.8% quarter-on-quarter in the second quarter of 2020. Following the trough in April 2020, the euro area economy rebounded strongly in the third quarter, making up about half of the contraction in the first half of the year. The significant surge in coronavirus infection rates and the associated intensification of containment measures since the summer constitute clear headwinds to the short-term outlook. In fact, recent hard data, survey results, and high-frequency indicators point to a significant softening in economic activity in the final quarter of the year. Moreover, economic developments continue to be uneven across sectors. In particular, activity in the services sector is slowing again, as it is the sector most affected by the new restrictions on social activities and mobility. Looking ahead, while the uncertainty related to the evolution of the pandemic will likely dampen the strength of the recovery in the labor market and in consumption and investment, the euro area economy should continue to be supported by favorable financing conditions and an expansionary fiscal stance. Overall, the risks surrounding the euro area growth outlook are clearly tilted to the downside. This largely reflects the recent resurgence in COVID-19 infections, the associated intensification of containment measures, and a highly uncertain timeline of the pandemic and its implications for economic and financial conditions. Euro area annual inflation decreased to -0.3% in September from -0.2% in August, reflecting developments in the prices of energy, non-energy industrial goods and services. On the basis of oil price dynamics and taking into account the temporary reduction in German VAT, headline inflation is likely to remain negative until early 2021. Moreover, near-term price pressures will remain subdued owing to weak demand, notably in the tourism and travel-related sectors, as well as to lower wage pressures and the appreciation of the euro exchange rate. Once the impact of the pandemic fades, a recovery in demand, supported by accommodative fiscal and monetary policies, will put upward pressure on inflation over the medium term. Market-based indicators and survey-based measures of longer-term inflation expectations remain broadly unchanged at low levels. Turning to the monetary analysis, broad money, M3, growth rose to 10.4% in September 2020 from 9.5% in August, thus remaining well above the levels recorded before the COVID-19 pandemic. Strong money growth continues to reflect domestic credit expansion and the ongoing asset purchases by the Eurosystem, as well as precautionary considerations which foster a heightened preference for liquidity in the money-holding sector. In this environment, the narrow monetary aggregate M1, encompassing the most liquid forms of money, continues to be the main contributor to broad money growth. Developments in loans to the private sector continued to be shaped by the impact of the COVID-19 pandemic on economic activity. Following strong increases in the early month of the pandemic, the annual growth rate of loans to non-financial corporations stood at 7.1% in September, unchanged from August. This, however, masks a moderation in recent monthly loan flows. The annual growth rate of loans to households edged up to 3.1% in September from 3% in August. Growth in loans to the private sector continues to benefit from historically low bank lending rates. According to our bank lending survey for the third quarter of 2020, credit conditions on loans to firms tightened. While banks indicated that their funding and balance sheet conditions remain supportive, higher risk perceptions could weigh on their attitude towards loan creation. Surveyed banks reported a fall in firms' loan demand in the third quarter, reflecting a decline in emergency liquidity needs and weakening corporate investment. This survey indicates an increase in household net demand for loans in the third quarter, while also suggesting the intention to tighten credit standards for households. Overall, our policy measures, together with the measures adopted by national governments and European institutions, remain essential to support access to financing, including for those most affected by the ramification of the pandemic. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirm that an ample degree of monetary accommodation is necessary to support economic activity and the robust convergence of inflation to levels that are below but close to 2% over the medium term. Regarding fiscal policies, an ambitious and coordinated fiscal stance remains critical in view of the sharp contraction in the euro area economy and the reduction in private demand. While fiscal measures taken in response to the pandemic emergency should as much as possible be targeted and temporary in nature, weak demand from firms and households and the heightened risk of a delayed recovery warrant continued support from national fiscal policies. The three safety nets endorsed by the European Council for workers, businesses, and sovereigns provide important funding support in this context. The Governing Council recognizes the key role of the Next Generation EU package and stresses the importance of it becoming operational without delay. Provided the funds are deployed for productive public spending and accompanied by productivity-enhancing structural policies, Next Generation EU will contribute to a faster, stronger, and more uniform recovery and will increase economic resilience and the growth potential of member states' economies, thereby supporting the effectiveness of monetary policy in the euro area. Such structural policies are particularly important in addressing long-standing structural and institutional weaknesses and in accelerating the green and digital transition. Now, before we are, together with the Vice President, ready to take your questions, I would like, on behalf of the Governing Council, to express our solidarity with France and the people of France and condemn any form of violence. I thank you, and we stand ready now to take your questions.
Okay, the first question today comes from Annette Weisbach at CNBC.
Thank you very much. Madame la Présidente, can I ask you about whether you have been discussing by how much you might enlarge your support program by December, and which instruments you primarily have in mind? Is it an increase in APP or PEP or both? Will it be a package? Secondly, the Fed has been quite quick in adjusting with the new inflation target. Would you follow suit quickly as well? And would you also consider, like the Fed is doing that now, to allow for an overshooting of inflation? Thank you.
Well, thank you very much. Let me maybe take the opportunity of your question to summarize for you what the Governing Council at large was in full agreement upon. The full Governing Council was in total agreement to analyze the current economic situation and to recognize and acknowledge the fact that risks are clearly tilted to the downside. We all acknowledge the role and the importance as a driving force of the pandemic and the increase of contagion, as well as the impact that containment measures will have on the economy. So it is with that recognition and that acknowledgement that we agreed, all of us, that it was necessary to take action and therefore to recalibrate our instruments at our next Governing Council meeting. So the teams, the committees, staff members are already at work in order to do this recalibration exercise. And this recalibration exercise will touch on all our instruments. It is not going to be one or the other. It is not going to be looking at one single instrument. It will be looking at all our instruments, how they interact together, what will be the optimal outcome, and what will the mix be that will best address the situation. Because we also all agreed that the aim that we are pursuing is to make sure that we can maintain favorable financing conditions in order to help with the recovery and in order to also address the negative consequences resulting from the pandemic on our inflation path. So we will be looking at everything. Now, in the meantime, we're not going to just stand still. We are going to use all the instruments that we have with the entire flexibility to address any development of the situation. We have done that in the past. We have responded very promptly, very appropriately, very heavily, some would say, to the first wave that hit the euro area economies. We have done it for the first wave. We will do it again for the second wave. But don't assume that it will be one instrument. We're going to look at all of them, the combination of them all, to arrive at the best possible outcome to deal with the situation, as I said, with one aim: make sure that we maintain financing conditions in order to support economic recovery and in order to address the pandemic negative consequences affecting our inflation path. I think you also asked me a question about our inflation target. Now, thank you for that, but you're a bit early, if I may say, because clearly we have a strategy review underway. We have resumed it now in September, and I'm very glad that we could do that and that we could honor the work that is being prepared by staff here at the ECB, staff at the national central banks as well. They're actively cooperating and working along the way now with a solid schedule. But clearly, this is premature because the inflation goal and the definition of it will come at a later stage. So I'm sure we'll come back to you with more clarification, but it's premature.
Thank you.
Okay, next question is from Martin Arnold at the Financial Times. Martin.
Hello, Christine. Can you hear me?
I can hear you very well. Please, your question.
Oh, hello. Yes. Yeah, hi. Two questions, if I may. The first question is your estimate for fourth quarter GDP growth in the euro area is 3.1% quarterly growth. Do you think that is now too optimistic, and do you think there is a risk of a double dip downturn in the fourth quarter, growth going negative, in other words? And secondly, I'm interested in why you've mentioned, in particular in the press release and your opening statement, that you'll be monitoring whether there's prospects of a vaccine being rolled out. How contingent is further loosening on the arrival of a vaccine? Thank you, Madame Lagarde.
Well, thank you very much. As you know, the number for the third quarter will be coming out, I believe, tomorrow, and might surprise on the upside. On the other hand, we are pretty confident that our number for the fourth quarter will be on the downside. Now, why do I say that? Because clearly we expect the month of November to be very negative, and it will reflect the slow process that our economies are going to go under, and the lost momentum, the sort of slower momentum that we have been observing ever since September, actually. Because when you look at all numbers, whether it's in the services industry, whether it's the consumer confidence, whether it is the PMI orders, the PMI employment, all of the slowdown and the sort of reduced momentum has been apparent since September. And it will clearly be aggravated in the month of November, given the measures that are being taken. So most likely, our fourth quarter number will be to the downside. Will it be negative? We don't know at this point in time, because clearly what the outcome of the current containment measures in November will be, and what kind of bounce back we will observe in November, will clearly depend on the infection, the contagion increases, the containment measures efficacy, and so on and so forth. So it's very difficult to predict, actually, how the month of December will or will not offset the numbers for November. But we don't expect good numbers for November, obviously. You had a second question that dealt with a reference that we make to the rollout of vaccination, the expectations of the rollout of vaccinations. And we inserted that because clearly in an outlook that is fairly dark, and given what has been asserted yesterday by the European Commission, this is probably in terms of expectations and into 2021, because we don't refer to the vaccination in and of itself. We refer to the rolling out of it. That hopefully would have an impact and will give hope to those that are actually facing containment, that are facing a rather gloomy outcome.
Okay, the next question is from Klaus Rainer Jakisch at Hesse.
Good afternoon. Mr. President, two questions, please. You mentioned several times now the significant downfall of consumer confidence in several member states. How concerned is the ECB Council that this may lead to deflationary pressures? And secondly, you also referred to the problem that an emergency package by the European Union is agreed but still not in operation. How concerned are you that this may come too late? Thank you.
Okay. Well, as you know, the
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
After 9 years at the helm of the world's largest wealth manager, Sergio Motti is handing over the reins. On his last week as CEO of UBS, I spoke to him about overhauling the lender, taking risks, and what it takes to be one of Europe's longest-serving bank CEOs.
It's not about beating somebody. It's about doing the best for your clients, doing the best for your shareholders.
Catch my interview with the outgoing UBS CEO, Sergio Motti, this Friday on Bloomberg Television.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
There's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for fifth generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead-up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to USA, 24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比我们早。但是玩信息玩软的，中国人的脑袋绝不比我们差。我们在座的所有人的脑袋绝不比我们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange, but it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant and libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion.